All right, welcome to the market recap for September 28th. Let's get right into it. Every day brings a lot of trickery and stuff, but again, what I want to show you with these market recaps is how things react around the pivots. And here's the thing: they're there to guide you. They're not necessarily always 100% accurate. When I say as in to the T, as in you might get stopped out and you might have to reverse it. That's the thing that you have to practice, is not having that bias, as in, oh, it has to do this or it has to do that. That's why you want to size appropriately, and you don't want to be trading huge, because you can end up getting chopped out before the actual move happens. But when the move does happen, it could be a really good day, and you don't want to be trading too much, because it just is mentally exhausting. So observing, pulling the trigger and not having fear, that is the key. But let's go ahead and take a look at where we're at. So remember, here you had you always want to look at the previous day session, or at least afternoon session, to see what's going on. You had this big volatile move at the end of the day. It broke out of that consolidation pattern. So that's going to tell me that the likelihood is we're going to be going up. So if you watch the September 27th video, anytime you have a consolidation breakout, usually it's picked a direction for, say, the next day or two. If it ends up breaking back below that, where it broke out in that consolidation, that's really bad, and a lot of stops are going to be triggered, and what will end up happening is then it will reverse very violently. So there's no guarantee, but you would say your odds are in your favor for the certain bias of the direction that it breaks out. But with that said, you don't know when that's going to happen. It may go up, then down, and all over the place until then. So in the back of your mind, you have to always be thinking of where it could go in a certain amount of time, like, say, morning session or afternoon session. But until then, you need to be very aware of where it's at in relative to a pivot. So you can see that we actually ended up gapping down, and then came down and broke the bear pivot within the 5, 10, 15-minute mark. And then what ended up happening is it was a look below and fail. So that's why you had this very violent candle, or volatile candles, because it closed below and then came back above. And then remember, like, what are the odds that this was going to come all the way down? It might have just reversed, because the trend is upwards. So anyways, so the rule is, when you're back above, you want to assume now you're playing in the box play. So box play is you potentially could be playing in this range until proven otherwise. But again, you always want to be in the back of your mind thinking, well, you have just like what we've seen in previous videos, where you run up to the bull pivot and then fail, and then it comes back down to the mid-range after the first hour. It's the same thing with the bear pivot, where you can come down, gap down, hit the bear pivot, and then skyrocket to the mid-range. But let's see if that ends up playing out today. So here you go, you have the next hour. So what do? We ended up coming up. You found resistance. It didn't make it all the way up, and then it collapsed. It collapsed, and it came all the way back down. It tapped the bull pivot, and then it ended up reversing and coming all the way back up again. So you see how, if you're not getting into close to these pivots, you can get really chopped up. And so you want to be really cognizant of where you're at in relative to these pivots. So here, I would risk to go long, because it's already proven that the first 2 hours they're really trying to that they held it within the box. So if they held it within the box within that first hour, and they didn't make a new lower, new high, the likelihood is you're going to stay in this box until proven otherwise. So what does it end up doing? It ends up breaking out, and this was at 10, and right before 10:30, you made a new high. So before the European session closed, you ended up making a new high, and you broke out of the box. So it's like ding, 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 ding. That tells me that we are no longer probably going to chop around in here, and my next target would probably be the mid-range pivot, and that could happen anywhere from between 10:30 and 12 o'clock when the morning session ends, or the 12:30 when the session ends. And again, if you haven't seen the other videos, these are 5-minute candles with a 30-minute overlay, and I talk in Central Time terms. So if I say 10:30, it's 11:30 Eastern Time. So what am I going to do? I'm going to probably target until 12 o'clock. Let's go all the way to the end of the morning session. And what does it do? It ends up from between 10:30 and the end of the morning session. It skyrockets almost all the way to the +1 ATR. So what do? By this time, you should have already made most of your money, whether it was from, you can see this consolidation play, it was a lower high, higher low, and then consolidation under this pivot, and then breakout. When you see this break, and it's above the previous day high, remember you draw a line, that's why I had this line here too, as that's the previous day closing high. See where it's closing the candle? That's telling me that this is probably going to have some momentum, and you need to just hold. That means you got to hold 5, 10, 15, 20, 25, almost 30 minutes right here for this full play. But look at this, 14,800 all the way to almost 14,900. That's 100 points. One contract, 100 points is $2,000. Two contracts is $4,000. So, you're better off, holding for the bigger position and holding for 30 minutes than scalping. A lot of this stuff right here can really mess up your mind of getting in, getting out, getting in, out, and not telling a story of what could happen on the bigger picture. Knowing time frames, what it's doing, you're going to have a squeeze or stops being triggered. Right now, I mean, you're making new highs, stops are being triggered, or it's just having that momentum. So with that said, you should have already made the majority of the move. From here to here, you sell. Okay, now you break above. Now I'm going to get in, and I'm going to target here. Move my stops along the way. What does it do? Boom, boom, boom. I get stopped out. Now it drops here. Session is now over. So, woo, you should be done. Leave. Enjoy your life. Be done. But if you don't, and you didn't play the morning session, compartmentalize. Don't worry about having FOMO like, oh my God, I missed all this. What should I do? Well, I mean, let's keep going. So I'm going to play all the way. Now you have 12 o'clock. 12 o'clock, have we made new highs? 12:30, have we made new highs? No. So, and you're back below the mid-range pivot. So now what I want to do is I want to short, and I want to short all the way back down to at least the bull pivot or VWAP. The reason why is because you're losing that momentum. That doesn't mean it won't eventually happen, but a lot of times on a bigger time frame, like a 30 minutes, you have to remember you have a run up and then a pullback. And usually what it's called is called a halfback, where whatever the move is, it usually pulls back half the move. So now you run up, pull back half the move before the next run up to the target that it wants for the day. So what does it end up doing? Comes all the way back down to VWAP, and this was at let's see, this was at 12:01, this was at 2 o'clock. So now we have one more hour left in the day, and you're thinking, oh, one more hour, what is it going to do? That's not a lot of time. 2 30-minute sessions is enough time for the market to do whatever it wants. I mean, look what happened right here in this session from here to here. So now what do you want to do? You're as close to VWAP and you're close to that bull pivot. So, and it's support until proven otherwise. If this broke down and the 5-minute candle closed below, then I would have been short biased to come down here. Or I'd be waiting to see if it ends up look below and fail. But because it came down, you want to go long right here. And your target is right here, which that's another almost 100-point move. And if it ends up breaking up here, then really I want to be targeting high a day or up into the +1 ATR. So what do we end up doing? Nada. We ended up making this play from here to here, but then we broke above and we lost the momentum. We lost that momentum of that last 30 minutes. It should have kept on going. The fact that it actually broke back below is telling me that it's weak, and the fact that it probably will not go back up, and we found the range for the day. So now you have a higher low on a bigger time frame, and so this is a consolidation pattern into the next day. So right here, that still would have been a great 40-point move, 885 or 880 to 840. So that's still a great, one contract, $50 or 50 points, that's $1,000 right there. So just in a 5-minute candle. So really good. But again, you want to like move your stop because it may not come all the way back down. Your job is not to predict what the market's gonna do. Your job is to get in at certain entries and where the good risk reward, and predict where something possibly could go, and then ride those freebies as you're in the money. So anyways, this was September 28th session. A lot of volatility. You can see a lot of range, but that's how you compartmentalize into your 30-minute, hour, morning session, afternoon session, and then you have how you're playing around VWAP and also these levels. VWAP is sort of a guide to tell you that you see that we're in a upward trend. So anything up here, you're in a upward trend, even though you have this downward pullback. You can have pullbacks in an upward trend. It's just a bigger time frame. If we would have dropped below VWAP, then my sentiment would have changed to more of a bearish bias. So anyways, until the next day for our review, good luck and happy trading.